Okay, let's talk about the housing market because we're finally starting to see a shift. Now, does that mean that we're finally going to see some relief? Does it mean that the next year is going to be much better if you're trying to buy a home, as in if you are a potential home buyer? Because I know that home ownership is one of the main goals for Americans and for pretty much everyone around the world. Well, let's talk about it. First, let's get the big numbers out of the way, and then I'll give you my thoughts on this entire situation. So as always, my name is Derek. I got my degree in finance. You don't have to. Welcome to my second channel where we talk about finance in a much more relaxed setting. So, the housing market. First, the median sales price across the entire country right now is a little under $440,000, which is still elevated. And by all intents and purposes, it's still very expensive. With that said, some of the other data is starting to point that the very heavily driven sellers market is starting to shift. First is that today, from a year ago, home sales are taking roughly 5 days longer than they used to. They're taking close to 40 days now, whereas a year ago it was closer to 35 days. And then if you go even further back into like the frenzy of 2021, 2022, it was even quicker. Also, home sales are down about 5%. So remember, both of those things basically mean that the power of the market is shifting from sellers to buyers. And another area that is also shifting that power is inventory. So inventory, basically how many homes are available for sale, those are also up. They're up about 12%. So if you have more inventory, right, more supply, and home sales are taking longer, which means that demand, seems to be down, more supply, less demand, you're going to move into a more, I don't want to say a buyer's market, but we might, for buyers, we might see a little bit more, I would say, ability to negotiate. So, and this is kind of where we get into the nuance of things, and I can kind of give you my take on this whole situation. So, when you look across the nation, there are going to be pockets where home prices are actually down. But in most of the metropolitan areas, most of the areas that are seeing a population inflow, you're seeing price increases. So on average, prices are probably going to increase, in my opinion, 2 to 3% this year. So this is a lot less than previous years, but we're not entering like it's not going to be a housing market crash. What I see more is a more balanced market. I think that we're going to get closer to equilibrium. Now, again, equilibrium doesn't mean that we're going to have a crash. That would be basically supply and demand shifting completely in the opposite direction. What is most likely going to happen is that homes, unfortunately, are still going to remain elevated. That's just unfortunate. But I think that a buyer's ability to negotiate this is what's going to increase. And you're seeing that in how long homes stay on the market, as well as more inventory. So what this is going to allow is it's going to allow for buyers to potentially, while it's still going to be expensive, buyers are going to be able to potentially hold out or maybe be able to negotiate for their dream home, even though it's still going to be more expensive. Because in previous years, basically what you had is you just had people buying whatever they could because inventory was moving so fast. That started to change in like 2023 and 2024, although the market was still heavily favoring sellers. So if you're in the market for a home right now, I think that you should use this opportunity not to try to get like $50,000 off list price. Something like 30% of homes are still selling above list price. So it is down from above 50% during the frenzy, but it's still a significant portion. I mean, we're not in a buyer's market. So I don't think you're going to be able to negotiate like $50,000 off of a home unless that home has been sitting and sitting and sitting, or there's something very obviously wrong with that home, right? It needs repairs, needs a new roof or something like that. But for the average home, it's more going to be like if something is broken, negotiate for it. If it needs a new roof, maybe negotiate for some credit for that new roof. If it needs new carpet, negotiate for that. Negotiate for buyer credits, negotiate for things to be fixed, and don't just buy the first thing that comes up. That is the major shift, okay? You can push back a little bit with sellers. Now, are you still going to lose some deals when it comes to if you use this strategy? Absolutely. Okay, but that's home buying, right? You got to put multiple offers, and only if you're very, very lucky, or if you want to go severely over list price, are you going to get the first home or your dream home right off the bat. What's more likely is that you are going to lose a deal here and there, but you have a higher opportunity or a higher chance to get your dream home this year as opposed to last year. And okay, I guess now the main thing that we should talk about is, when does this actually change? When does the market actually move to a buyer's market? Well, again, it is still supply and demand driven. So unless we get significantly more inventory, okay, not just 12% more than the previous year, we need significantly more inventory. Until that happens, which means builders start building in more quantities, it's still going to be either an equalized market or a slight seller's market. So how do we actually turn the tide or turn the table? Well, you need more home builds, because right now the country is about anywhere from 2 to 7 million. It's probably on the lower end now, okay, but most estimates put it anywhere from 2 to 7 million homes short of current demand. Okay, so in order to equalize, we have to do something about that demand that is lacking, or excuse me, that supply that is lacking. Now, the problem is, in order for supply to uptick 1, 2, 3, 4 million units, we need builders to build more homes, and we need builders to build more affordable units. Right now, because interest rates are significantly elevated, remember, home builders also use mortgages to fund these projects. They're not just, at least a large portion of them are not just funding these builds in cash. So just like you use a mortgage, they're using construction loans and other types of loans. Maybe I shouldn't call it a mortgage. Other types of loans. So they are constricted by the same high interest environment that you are as a home buyer. So we're not really going to see a change until interest rates come down. The problem is, of course, what happens when interest rates come down? Well, you get an inflow of buyers, right? Because that increases demand. So we need interest rates to come down. We need the market to equalize or stabilize. And then we need interest rates to remain more affordable for longer, so these builders can stop building middle to high-end homes, okay? Because right now, those are the only things that make feasible sense, because if you have a massive loan to pay off with a 6% or 7% interest rate, these home builders are going to build more expensive homes, which in reality, I mean, what is the difference between a luxury home and a basic home? It's really the finishes, right? Wood flooring, quartz countertops, custom or semi-custom cabinetry, dimmable lights, all the things that just elevate it a little bit, right? Hood vents over the stove instead of a microwave. I mean, just little things, stainless steel appliances, whatever. These little things that elevate it allows these home builders to then sell the home for $100,000 or $200,000 more than they otherwise would have. So one of them, of course, I mean, they're going to be profit driven, right? But one of the main reasons why they're doing that is because affordable homes, even though there's an extreme demand there for affordable homes, they cannot turn a profit because of these high loan costs, mainly interest rates. Now, of course, can the government also step in and try or incentivize home builders to build more affordable homes through incentives, through basically any sort? I mean, you can incentivize, you can give tax credits, you can give tax refunds, you can do all sort of things for these builders to basically build more affordable homes. So yes, the government has a place to play in that, but we also just really need lower interest rates. So to summarize this video, I just wanted to make this video because I am starting to see a shift in the market. To summarize all this, one, it is starting to shift. It's not a buyer's market, but it's starting to shift away from a really heavily dominant seller's market, which means you can negotiate harder. You can start to ask for things. Does that mean you're going to immediately get your offer accepted? No. Okay. But you should be a little more picky. Okay. Does that mean that you're still going to lose out on a couple offers? Yes, but it's not going to be as brutal as it was the last couple of years. Okay. Does that mean that you can ask for $40,000, $50,000, $60,000 off list price? Probably not. Okay, but it is starting to shift more into equilibrium. And then moving forward, prices are still going to go up. Home prices are still going to go up. 1% to 2% this year, in my opinion. That's where the estimates also put it. And until we get interest rates to a more reasonable level, okay, and I know people are going to say, well, in the 80s, we were at above 10, above 15% interest rates. I know. I get it. But this current economy that we're living in, it was built on cheap interest rates, 2%, less than 2% interest rates, 3% interest rates, and mortgages was like 2 to 4%, okay? That is reasonably low currently, okay? Remember, we go through economic cycles. The current economic cycle was built on that cheap money, which means everyone is accustomed to that cheap money, including builders. So everybody has jacked up their prices also because of inflation. That means all the subcontractors are getting paid more. So until that changes, we're not going to see a noticeable, and I don't even want to see a decline. I don't even want to say a decline in prices, but you need to start to see more affordable homes be built. The $200,000, $300,000 homes be built, but that's only going to happen when interest rates come down and it's actually feasible for builders to do that. Or if government steps in, either local, state, or federal government, and starts incentivizing the building of these types of homes, which I wouldn't hold my breath for that. So if you like personal finance, world economics, and investing, you're in the right place. I hope this video was informative. If you like this more casual, laid back style of economics and finance, you're in the right place. If you want a more structured format, we cover similar topics, and I would say I do more videos on the main channel. Those come out every single week. Definitely check out the main channel. That's just my name, Derek Polishek. That is more structured, more edited, more graphs, more charts, more structured format. If you like this casual style, then definitely stick around. Please consider subscribing if you haven't already. And with that said, I hope you have a fantastic rest of your day. If you are a home buyer, I wish you the best of luck, and I hope this year is the year that you finally get to say that you own a home. And with that said, I'll hope to see all of you in the next one. Until then, take care.